joining us today. I'm Richard Close with Canaccord Genuity. I cover digital health, tech-enabled healthcare here at Canaccord. Thank you for joining us for the 41st Annual Growth Conference. I'm excited to have Sharecare here today. We just initiated on the company about a week or so ago. The company completed a SPAC transaction to come public at the end of June and beginning of July. Just reported their earnings yesterday and had their conference call, but we're excited to have Jeff Arnold, founder and CEO of the company, and Justin Ferrero, as Chief Financial Officer, here to introduce us to this story, and then we'll jump into sort of a fireside chat for the second half of the presentation. So with that, Jeff, I'd like to turn it over to you.
Great. Thanks, Richard. It's nice to be here today. So we're excited to be here and kind of quickly take you through Sharecare and get to your Q&A. I have a long history in digital health, started WebMD back in 1998, and have been trying to figure out how to use technology to, connect the person to the ecosystem. So how do you connect the person to their doctor, to their health plan, and to their employer? We've been running Sharecare since 2012 and have had what I think a lot of success in a relatively short period of time. We raised $500 million privately before going public. And you see all the different investors that are here on the slide. And the idea here is, how could Sharecare go to large trusted brands and achieve financial and strategic alignment with them and be their digital ally? So as healthcare transforms, how can Sharecare be that platform with our partners? And we've been able to achieve scale. So we're greater than a $400 million business. We're profitable. And as Richard said, became a public company in July. Our positioning is that we believe that we're a category of one company for four primary reasons. One is we have the most comprehensive platform in the space. Two is we're extremely well diversified in revenue and scale. So we have big clients across enterprise, provider, and consumer. We believe that our clients buy Sharecare or invest in Sharecare because of our data and our innovation. So even though we're profitable, we're heavily invested in innovation. And we have a differentiated financial performance with strong revenue visibility, profitability, and confidence that we can sustain 20% year-over-year growth. And we had a great quarter yesterday that Justin will talk about. For us, it's all about the platform, not the point solution. The big picture thinking is you don't have 12 apps to manage your money. You're not going to have 12 apps to manage your health. And we have been working on this platform that allows the doctor, the health plan, or the employer to message the person, motivate the person, manage the person's data, measure effectiveness. And because we're all working together on behalf of the user, create a movement where the healthy choice is the easy choice. And the way that we monetize this platform is we bring it into enterprise and we sell this platform to large health plans. And we've had some good success working with many Blues plans. So we have Blue Cross Blue Shield of Minnesota, Blue Cross Blue Shield of Arizona, CareFirst in Maryland, Highmark in Pennsylvania. We just won Blue Cross Blue Shield of Idaho. Anthem made a $50 million investment in us in April. As you know, they've got 44 million members. And in 2021, we broke out into managed care. We launched our first account with Centene. And last quarter, we won a 800,000 person RFP bid for HealthNet, which is one of Centene's businesses in California and Oregon, as well as we launched into Medicare Advantage with our first launch of Care Plus, which is in South Florida, owned by Humana. We also sell this platform to key large employers. Companies like Delta onboarded their 70,000 associates in 2021. Companies like State Farm just renewed with us. And so we've got some great jumbo clients, as well as we sell this to government, with the largest being the state of Georgia, where they have 650,000 of their members enrolled in Sharecare, which includes over 200,000 teachers. We get paid on a per member per month for the entire population. And then we have numerous upsells, such as digital therapeutics, that we get paid on a per enrollee fee and have lots of contracted revenue go-get opportunity. This segment represents 60% of our revenue and about $240 million per year. In addition to enterprise, we also believe that that providers are going to be important in the Sharecare platform over time. And so over the last 5 years or so, we've been building a substantial footprint with large health systems and clinics. We have over 6,000 clients in that space. And this year we'll retrieve nearly 5 million medical records. So you can come to Sharecare and say, my medical record is scattered all over the Northeast, and with your consent, we go collect those records for you. Our vision is over time that we'll create Sharecare enabled doctors. So you'll see the Sharecare logo, and that would tell a Delta employee that they could share their data with their doctor, or their doctor could prescribe Sharecare. And we've been making investments in the value-based care space as well as payment integrity. So we made a couple acquisitions last year in that area so that we could get financial alignment with the doctors alongside of the strategic alignment. So this is 100 million plus revenue for us at Sharecare in the provider division. And then lastly, we have a consumer division. So we're B2B2C. This really differentiates us in the space. I think it gives our enterprise clients the confidence that we have the street credibility to engage with people. We have over 2.5 million people that follow us in social. We've had over 50 million people take our real age test. We have a database of over 100 million people for first party data. We've made over 60,000 videos at Sharecare, and this unit generates 65 million in revenue and underwrites all those components of our business that I just talked to you about. And we love it when our enterprise clients are telling their employees to follow Sharecare on social because of the quality of our information. I mentioned that our clients buy us for innovation, for data. I'm going to touch on just a couple areas here. One is we made a great acquisition in February of a company called Doc.ai. Anthem was a $40+ million investor in Doc.ai, and last year had executed a $100 million AI contract with them. Based in Palo Alto, about 77 engineers. We acquired them in February, and that row of products on the bottom is what we've been integrating into the core Sharecare platform. So, really deep into edge computing, federated learning, zero trust, and bring some great AI capabilities to our company. With Doc.ai, we started having conversations with Anthem about using the infrastructure of Doc.ai and their tool sets to create a multi-payer advocacy platform. And so if you look at Anthem and all our clients, often they don't have 100% of the business in these jumbo employers. Maybe they have 80% of the population, and the other population is on another health plan because maybe multiple plans are offered or there was some acquisitions made. And so we're creating this product called Sharecare Plus, which will be the multi-payer advocacy solution that rides off the core Sharecare platform. And we think Anthem has about 12 million of their 44 million members that we would target for this product offering, as well as obviously bring it to all our other clients and new clients. This is significant for us because it allows us to bring some really important new capabilities to the platform for our clients, but also enables us to increase our per member per month and pretty substantially. And then real quick is I'd like to introduce Sherwin, who's on the call here to talk to you about an acquisition that we announced yesterday with CareLinks and what CareLinks is and kind of how it fits into the Sharecare umbrella. And Sherwin, please.
Yeah, thank you, Jeff. Really excited to be here. So as Jeff was describing, healthcare continues to move to become digital. And one of the clinical interventions, even with the artificial intelligence, how to amplify the reach of the clinician given the aging of the population. What we do at CareLinks, we've aggregated a network of 450,000 tech-enabled in-home care providers that we're going into the homes, really supporting with activities of daily living, bathing, grooming, meal preparation, transportation, housekeeping. We are in contract with some of the largest health plans in the country, as you see here, and they're scaling out programs as supplemental benefits, transitional care programs, or we get paid on a PMPM basis. But we're going in the home and they're realizing by offering us the non-medical intervention, they're able to get the members to open up their doors. And while we're going in there, helping them with their everyday life needs, we're capturing over 170 data points that they were struggling to get through a pure digital and or telephonic based approach engaging with their members. And so we're getting a holistic map of what does this member's life really look like? And then they're building trust. And then we're layering on additional interventions, train them how to use all the devices and technology that are being pushed down to them. And we're kind of supporting them at home. And what we're seeing is, one, reduce avoidable hospitalizations and utilizations of acute care. Two, better well-being, staying at home longer. And so that's why the health plans continue to scale out the CareLinks as a supplemental benefit.
Great. And I know Jess is going to get into some of the numbers, but on CareLinks and Sharecare as well. And so with that, Justin, could you take us through kind of the financial performance for Sharecare?
Yeah, absolutely. Justin Ferrero, for those of you who don't know me, President and CFO. I've been in the same role with Jeff for 20 years. And as he touched on the front end, we've raised, over $1 billion for our various companies and had multiple successful exits for our shareholders. We have a great business at Sharecare. I want to start with a few key highlights. First is we have high revenue visibility, recurring revenue-based model. Jeff, the slide's not showing, but I'll keep going. There we go. We have scale. We have thousands of happy customers, from health plans to hospitals to government agencies. We have a lot of ways to drive growth, as Jeff touched on, from driving new logos to expanding our digital therapeutics to expanding the value-based care and health security, and now home health with Sherwin and CareLinks. And we're profitable. We think this is a big differentiator. We're EBITDA positive. We have a really clean and nice balance sheet after our de-SPAC with over $400 million in cash and no debt. And because we don't burn a lot of cash, the lion's share of those dollars, that $400 million in cash, is going to go towards growth, which we recently shown with our acquisition of CareLinks yesterday. Just quickly, we released yesterday. We had a great quarter. Our guidance for Q2 was $96.5 to $98.5 million and $6.5 million of EBITDA. We came in at the high end of our range at $98.5 million. That was 26% growth over prior year's quarter, 10% growth over Q1. Our adjusted EBITDA of $6.6 million was ahead of our guidance. Just to touch on that, we were slightly down against EBITDA last year. That was with Q2 last year was the onset of COVID. And instead of taking the PPP loan, we took salary cuts as management. We furloughed employees. We pulled back travel, lots of things just to manage through that period of time. But normalized, that EBITDA would have been closer to $4 to $5 million. So it would be nice growth year over year. But we had a fantastic Q2. I want to talk a little bit about the CareLinks acquisition. We couldn't be any more excited. It was incredible. This is a business that's going to grow 7x from last year to pro forma 2022. Sherwin basically as a standalone management team driving this business, grew it from $5 million last year to $20 million this year, and has a line of sight to $35 million without the Sharecare engine behind them. And for our shareholders, this is a highly accretive transaction. We're paying less than 2 times 2022 in our purchase price. So a lot of our peers have been out and making acquisitions recently at north of 10 times 2022. So we think we've not only found a great business, a great management team, a great service to our customers, but we've done it in a highly accretive way for our shareholders. With that, we've updated our guidance. Prior to yesterday and closing this transaction, we were at $408 million for 2021. We increased that to $414 to $415 because of the stub year period from mid-August to December. We believe we will generate an additional $6 to $7 million with this acquisition. And we've increased our guidance for 2022. Was $533 million, with the $35 million that CareLinks and Sherwin will bring. That takes us to $568, which is about 37% growth as we look into 2022 from this year. So couldn't be more excited about how the business has been playing out. Fantastic Q2. We executed on what we told the street we were going to do, which was we were not only grow organically but be aggressive on the M&A front. Closed a transaction within 5 weeks of becoming public, and you can expect more of that. Us hitting our numbers and doing more M&A. So bright quarters ahead.
Great. That's it, Richard, on the slides.
Excellent. Thanks for that. Great update. First on CareLink, since we just hit on that, Jeff or Sherwin, I guess this is for you. It seems like it's more a Medicare-focused offering, and if I'm correct in that, I guess, Jeff, you're just beginning to get into Medicare with, you mentioned the Humana business that you signed. So how are you thinking about the synergies between the two businesses?
Yeah, so we see a lot of great synergy. It's tech enabled. It's got a great network. Sherwin's got some big clients that Sharecare is not working with today, the Uniteds and the VAs and the Kaisers of the world, that hopefully will open up some new opportunities for us. We're doing Medicare. We have lots of proposals out in Medicare right now, growing Humana, plus many of our Blues plans and the Centenes of the world are in the Medicare space as well. We also see this as to our employers as an additional benefit that we can provide. A lot of our users are in that 40 to 50-year-old age span where they're taking care of their parents. And so as I earn incentive dollars on Sharecare, how can I reapply those dollars for maybe 12 hours of home care for my mom, as an example? And we're really excited about that. It fits even into our direct-to-consumer business. I mean, Sherwin's got a big partnership with AARP that's endorsed the CareLinks platform. And obviously we have a big consumer business as well that we'll be able to bring these services to. So it hits across all lines, and our provider business. And Sherwin, I don't know if you want to add to that.
I think you did an amazing job. It's the one thing on the synergy side. Just want to echo what Jeff was talking about. Our customer, while we're getting paid by the health plans and caring for the Medicare Advantage population, if you really look at who we're actually helping, it is that 40 to 50-year-old employee who's mid-level management. The employers, if you look at it, there's like 13 billion lost employee productivity of juggling work, taking care of mom and dad. And now they have the ability to have comfort of knowing that we're going in the home, supporting their loved ones, getting real-time updates of what's going on. So there's a clear synergy of improving the well-being of those employees. But on top of it, we're actually caring for their parents at home with these interventions. On top of it, it's not just seniors. We're working also with the VA in helping with post-surgery. So people coming out of the hospital with transitional care services who, when you need to go home, you need to have that adequate support. And so we help train those patients and veterans on cardiac rehab, the RPM devices. So there's a lot that we can do on the commercial population. All of us have had loved ones come home from the hospital. Wouldn't we love to have support there, going over the care plan, ensuring they have the right trajectory post-discharge? So I definitely do think there's a lot of opportunity on the commercial population.
Okay, good. That's very helpful. Jeff, I do want to cover a couple things here. You guys do a lot of different stuff, right? So in some cases, it can be a little overwhelming where, you got enterprise, you're doing a lot there. You have provider, you have the consumer. So what I think is really interesting is you're able to connect all the key stakeholders. On the enterprise, though, with respect to the digital platform, can you just dive into that a little bit more? Exactly what is the digital platform? You talked about the Anthem relationship and adding some stuff around advocacy. But what is digital platform? How is it differentiated versus like benefits navigation and some of the other things that people are offering?
Yeah, so I think, we have multiple ways to win. And because we're so comprehensive and because we're truly a platform, that's what differentiates us and allows us to win clients. From a competitive set, we're competing against a bunch of different players, with our approach being we're the one-stop shop. So for example, we might be competing against a Rally, which is owned by or say, and so we go up against them often. Then we add the second component of our offering, which is our marketplace of digital therapeutics. And so in that example, we might be going up against the individual therapeutics. So there might be a Teladoc or a Livongo or others in which the client may be considering sourcing these independent.
You're dropping out a little, Jeff. You're dropping out.
Oh, sorry. You guys, can't hear me?
You're back. You're back.
That's good.
Okay. Where did you lose me?
Just after Rally.
Okay. So real quick, we've got Virgin and the Rallies on the wellness benefit navigation we compete against. We've got numerous point solutions we compete against for our marketplace. So that could be like a Teladoc Livongo, where the client's sourcing an individual. We're moving into advocacy with the Anthem investment. So that's going to be like an Accolade Quantum. And now we just bolted on home care with Sherwin. And so, we think what makes us attractive is, imagine if you're running the HR department for Delta, or you're working for one of these, regional health plans, of trying to figure out, how am I going to curate this and do it in a way where the data is interoperable, the experience is user-friendly, and it's affordable, because everybody wants their PMPM and upsells. And we think this one-stop shop approach is really important. And then where we see us being 2-3 years out, in which we're already developing against, is how do we get reach with doctors? Because, providers are going to play an important role in here. And how will I share my Sharecare data with my doctor? And so we've got 6,000 clients, and we're going to create the Sharecare enabled doctor. And then lastly, how do we keep our street cred of being a consumer-friendly platform, that consumers will engage with on their own, so that we can fulfill the promise of going from episodic to everyday. And so where you're not just incented to engage in your healthcare, but you're actually doing it because we've made the healthy choice the easy choice through Sharecare.
That's great. Very helpful. I think it's extremely interesting connecting all the different key stakeholders. So you mentioned something yesterday. Just want to go over, Justin had the numbers up there. With respect to the 2021, you said you had 97% of the, everything under contract this year, correct?
That's correct. And there's only one part of our business that's not long-term contracts, which we talk about is on the consumer side, but it's high repeat customer. But the life sciences business buys really more in campaigns. But Q4 is always their largest quarter. That's the seasonality. We have excellent visibility into that Q4, and we are confident in achieving our target of 414 to 415 for the year. And we're going to go into 2022 with huge momentum. We'll be going into next year. Q4 will be by far our largest quarter this year. As you've seen, we've had sequential growth quarter over quarter. That'll happen again here in Q3. And we're going to go into next year at close to a $500 million run rate, and which gives us high confidence in achieving our increased guidance of 568 for next year.
Okay, we're running out of time, but I did have one question. Obviously, Anthem and Centene, we're bullish on that opportunity. You announced the new Centene in Northern California and Oregon. How quickly do you win a state like that and it starts generating revenue?
Yeah. Well, on the Centene, that'll start in January. And so that's pretty easy for us. I mean, that's like a 90-day implementation, because it's taking our core platform and we just got to ingest the claims data and configure the platform and the incentives, and boom, we roll out. So those are like 90-day implementations. On the Anthem, we kind of think of ourselves already as a digital advocate. So we were already to the red zone for a lot of the capabilities that we needed to have in place to do multi-payer advocacy. Then we had the added benefit that Doc AI, works really closely with Anthem's engineering team. So there was, we hit the ground running, and we will be in market in 2022 with this product with a handful of big clients. And then we're already working right now on a really robust go-to-market for 2023. So that's something that's, as a new product collaboration that started in April that'll be in market by, call it a year.
That's great. Well, we're out of time. I have a long list of questions, so we'll follow up with you. But thanks. Congratulations on the transaction, both transactions, I guess, with CareLinks and on the quarterly results.
Great. Well, thank you so much.
Thank you, Richard.
Take